Fantastic. Thank you, Bo. Thank you, says Barbara. That's great. Okay, we're going straight over to our next presenter, Christian Fromhertz, who's waiting patiently in the wings. So let's just go straight across. Welcome to everybody who's just joining us. If you're just joining us now, this is Round the Clock Trader US, and my name's Simon Campbell, and I'm delighted to welcome you, our next speaker, Christian Fromhertz from the Tribeca Trade Group, right in the middle of Manhattan. Christian, you should be able to hear me now. Are you there?
Yeah, how you doing? How's the mic sound?
Oh, it sounds great. Thank you. Sorry to keep you waiting there a few minutes, but you now should have an accept button for the presenter role, so we can
Okay,
just get.
cool. I just want to make sure I got the right screen. Let's see if that works. How's that?
That's fantastic. Market update, ETF fund flows. Fantastic.
Okay, good.
We've how have you been keeping? I know, thank you, but you were with us last month, giving us an update. I mean, it's all going on in the markets in the US right now, isn't it?
Yeah, I mean, from day to day, it's completely something new. Besides, I originally said that things would be, the market would be choppy until, I was really concerned with earnings season, especially as prices have moved higher. When prices move higher, I think people tend to concentrate more on earnings. So I think that would have been enough events. And then, of course, every day there's literally been something different going on, either with the administration in the U.S. Obviously we were very focused as well. I'm sure you were on the French election as well. And so I wanted to give kind of an overview of what we saw with money flows. I know I'm going to talk about option flow as well, and how that's a really good short-term indicator. But it seems like whenever I'm on your webinar, which again, thank you for having me again.
Oh, it's our pleasure.
But it seems like whenever I'm on, there's always something pressing or something very interesting going on. But I guess that's just the way the markets have been going lately.
It's an exciting year. I think there's something happening every day in the news, politics. So yeah, we're all gripped with it. But let's go ahead and have a look. And again, welcome any questions as we go through from those on the webinar. But in the meantime, I'll hand over, Christian, to you to introduce yourself. Thanks.
Cool. Thanks so much, Simon. Appreciate it. Yeah. So again, my name is Christian Fromhertz. I'm the CEO and founder of the Tribeca Trade Group. This is something that I started a little bit over a year ago. My previous background was I was a longtime trader with Merrill Lynch, which got taken over, of course, by Bank of America. So I was a senior trader on their Delta One trading desk. I was a director of ETF trading. So that kind of dovetails in exactly to my trading style. What I focus on is macroeconomics, and then kind of drill down. So it's very much a top-down approach to what I'm looking at, but I'm very much looking at trends going on globally. So even though I'm a trader in the U.S. and of course we'll look at the U.S. market, I really look at what's trending across the globe. I'm looking for opportunities, and then going back into ETFs. The beauty of ETFs is I can get into any market that I want to very easily. So that's why I'm very partial to ETFs, because it allows me to trade any particular trend that's going on. I think last time I was on a month ago, I talked about a lot of that money was flowing to Europe, which we had not seen in over a year. So that trend has continued to kind of slow down right before the election. There was definitely some weak hands that were shaken out of the market on Thursday and Friday. There was definitely some risk reduction. We saw that in a couple places, and I'll show you a couple charts of the France ETF and the European banks ETF. Certainly volumes, they were record volumes that we saw in a couple of those ETFs. So it definitely got interesting towards the end. And for my portfolio, I didn't really change too much. I kind of just wanted to stick with the trend, and kind of had a feeling that there was going to be some risk reduction. But I just I didn't really see any breakdown in the trend, so I kind of just stayed with it. And it worked out pretty well for me. So what I used to do at Merrill Lynch, just to kind of expand on the ETF trading, I provided risk markets for hedge funds, big institutions, and I did this in U.S. markets, international markets, fixed income, commodity. Again, considering that that ETFs touch everything. Prior to that, I started off my career at Morgan Stanley. I was a financial advisor, and my education is from New Jersey, Rutgers University in New Jersey. Where I got my MBA. So I'm just going to go into some charts, and I'm going to just kind of go back and forth from this because I think it was pretty interesting to kind of look at some of these trends that we saw last week. So in particular, this is the French ETF. You could see the volume, what happened here. Again, if you kind of focus on what happened last week and not so much this week, but look at the volume that was going into here. You know, I try to track if there's money coming out here, and there was a bit of outflows, but you know, you pan this out 5 years, and you could see that the EWQ ETF, again, which is the French ETF, which has hit some major resistance. Real nice move from the beginning of the year, from the first couple months of the year, but you could see the volume, how heightened it was towards the end of last week, the biggest volume that we saw since back in 2013. Same thing with EUFN, which is the European financials ETF. You could see really how this ETF has gotten popular. That's one thing to observe over the last year, but you could see how the volume has really picked up here towards the end of last week. So that's kind of what we saw, just to kind of bring you up to speed for what we saw last week. And then the other thing that I've noticed, what I track is ETF fund flows. And the one thing that I noticed was from the beginning of the year, there was $96 billion of equity inflows. So a lot of money has been going into the market, and this was also towards the end of the year as well, towards the end of 2016. So a lot of money, new money, has been put to work. So as of last week, it was $96 billion that have been added to equity ETFs. And again, this is really where the hot money has been going into. You know, the financial media loves to talk about passive funds versus active. You know, that's a completely different argument. But we've seen there's been a lot of money that's come out of active managed mutual funds and have gone into equity ETFs. So really, the gauge of ETFs is I think it's just more, it's a better product. But it just, for me, it's why I track these numbers, is because that is where the money is going into these days. So really what we saw is massive amount of money coming into the beginning of the year, but then all of a sudden it was as if the spigots had turned off in terms of the inflows. So between April 1st to April 21st, there was less than $1 billion. So we were kind of sitting in a market for about a month. You can see equities are rallying here a bit, but if you go to SPY, or if you go to you know, just looking at the S&P 500, you know, it was very representative of what we were seeing from the beginning of April to the end of last week. Just very, very choppy markets. We started to break down, but volatility, you know, wasn't really pulling us down that much. You know, we did get a little bit of an uptick in volatility, but really coming from low places. So, you know, people get excited because the VIX moved up from like a 10 to a 14, and they're like, oh, you know, there's all this volatility present. You know, you had to kind of keep in mind where we came from. So that really didn't drag us down too much. So we just didn't steal that much. Not only was buying absent for the first couple weeks of April, but selling was absent too. There was basically about 1 week of decent outflows, and that's it. But when you net them together across a couple weeks, it was essentially flat. So you kind of knew something was up, and sometimes I use this as a contrarian indicator. And you know, I was thinking, hey, if all this money has been rushing into the market and it just stops, it kind of tells me that we have a lot of events going on. We have earnings, we have the French election, and then we also have a couple things you know, going on in terms of a possible government shutdown, which I think is going to be at least possibly postponed for a week until they make a decision about that. So all that money kind of stayed on the side, and for me, I just said, well, I don't see a lot of money coming out of the market. It just looks like people don't want to really go in with 2 feet right now, and in fact, at all, with not even one foot or a toe going into the leading into those events. So then basically what we've seen in the last 3 days is just a massive catch up, and you know, you look at the move in equities, and you can see this massive gap up globally, not only in Europe, but also in the US. And really money has been deployed. So all that money that was sitting on the sidelines for 3 weeks came rushing back in about 2 or 3 days. So as of last night, you know, I do this basically as real time as I can. Bloomberg updates these fund flows on a nightly basis. So this $17 billion that have come in has been just this week alone. So really, you know, considering nothing happened in the first 3 weeks of April, then all of a sudden, $17 billion come back. So money rushed in very, very quickly. So I think, you know, today, so it kind of just brings us up to speed. And if there's any questions, you know, I'm happy to kind of just answer any questions. I know this is new for some people to hear about these fund flows and what's been happening. But you know, Simon, if there's any questions at this time, I'll be happy to answer. If not, I'll continue with what I'm looking at now.
Christian, happy for you to continue right now. A couple of questions, but they're not directly related. So
okay,
thank you.
Great. So my take is, you know, we're now kind of butting up against a little bit of resistance. One of the things that I look at on my charts, without going into crazy detail here, is value areas. They provide great support and resistance areas. You know, what is a value area? First of all, it's basically looking at the volume at price. And I think that's particularly interesting because that's where buyers and sellers meet up. And that can often create support and resistance barriers into whether or not we want to break out. So we're hitting, in the S&P, the last couple days, we've been hitting some resistance. This was what, Tuesday? This was Wednesday. We tried to go higher and failed. Today we've been kind of chopping around a little bit. We're at the higher end of the range for today. So really what I'm watching in the S&P 500 or in the SPY ETF is 238.99, so call it 239. In the S&P, I'm really looking at, this is an S&P futures, which is a little bit of a different picture. There's some support at 2380. So again, a little bit different picture between the two. But when you think about why we're pausing just a little bit after a gap up after the last couple of days, you go to the Qs, which have completely broken out and have been the leader the last couple of months. And even when we had a little bit of volatility, all we basically did was sit back to the 50-day moving average, which again, it was not a bad place to pick up some longs. But you know, today I was expecting a lot of chop because after the close today, we get the heavy hitters that report. So 30% of the NDX 100 or the Qs report after the close. You have Amazon, Google, Microsoft. We also have Baidu reporting after the close, and we've got a number of other tech companies reporting after the close. So it'll be really interesting to see what happens after the close. We're going to be actually in our trading room. We're going to be talking about a couple trades for which I'm not going to go. It will take me a whole half hour to go over option trades and kind of how to set these up for the names that are reporting after the close today. But you know, I think we're at a really interesting point. I'm not adding a ton of risk in here. I'm going to talk about option flow in just a second, but with 30% of the NASDAQ reporting and being that we've already broken out, I think it's time to be a little bit lighter on risk and then just kind of wait and see how these reports are going to come out. Maybe you get a chance to buy on the dip. Certainly that's what's happened. You know, if you go to the Google chart, and you could see on my charts the last couple times that Google has reported earnings, and they've had this pattern of running up into earnings before, you know, a little bit here, a little bit here, but definitely the last couple quarters. So if we kind of zoom in the last 3 quarters, including today, you could see that Google has run up into earnings, has earnings, and you know, then fades a bit. It did this as well back in January, a huge run up in Google, and then it reports, and it's not as if Google has been reporting bad quarters. It's just the fact that the stock has run up so much. So you kind of have the same thing going on the last couple days. It seems like the pattern is repeating. So what this means to me for Google is that even if they report a solid quarter, which I don't have a crystal ball, but I'm thinking that they do, because they normally do report a pretty strong quarter. Even if they report a strong quarter, it's going to be tough for them to go higher here because of the recent price action. So they're really going to have a knock your socks off quarter. And really hit on all cylinders for them to break higher. So not saying that can't be done, but I think that's what's expected. So just back to my thesis that I mentioned a couple of minutes ago, I think it's time to just kind of be a little bit patient and see if these names, when they have come in after earnings, like for Google, and same thing for Amazon, which I'll bring up the Amazon chart, which is a little bit similar. If they do come in a little bit on earnings and sit back to maybe the 50-day moving average, which is this purple line, I think is a great place to buy. So I did mention, was going to mention the Amazon chart as well, but it's had a similar pattern, maybe not as pronounced as Google, but last quarter it did the same thing, kind of ran up from 760 to 820. And then sat down just briefly. I mean, that was a quick buying opportunity. You didn't get much before the buyer stepped right back into Amazon. But it seems like this was over the last couple months. It was moving sideways for about a month. And again, this is why I use the value areas to tell me where the price is going to break out. And we caught this in the trading room, a nice breakout back on 329. As soon as I saw this, I waited for this breakout. I didn't have any positions on in here. I was waiting for confirmation. I added a call spread and we went higher, and that was a nice, a really nice swing trade that we put on. So we're right back to the highs. I'm very close to this ugly looking candle that we had a couple weeks ago, but it is running into the earnings report today. It's up $12. It's up over 1%. So I was looking at a long Amazon play today, but I'm kind of changing my mind here as it's up $12 today. So that's kind of my just going back to your original question, what are you looking at today, and what are you most focused on? Really, these earnings reports are something that I am definitely focused on and want to see how the price is going to react afterwards. I think it's good to have some chips, on the table, and some off ready to buy in case we do get a dip. One thing I also started looking at, because we have seen call buying recently in Alibaba, basically the whole way up here, and you can see the relationship between Amazon and Alibaba. Amazon is the candlestick chart, and Baba is the orange chart, and you can see that this has been tracking pretty well. Baba doesn't report for a couple weeks, so kind of a little bit of a less, or I don't want to call it not as risky, but certainly with options premiums elevated, it's going to be definitely pricier to get into Amazon options than Alibaba. So I'm actually looking at an Alibaba play for a long here, even though also Alibaba has broken out. So a couple other things that I'm looking at, so option activity, why I'm not really focusing this whole presentation on option activity is it becomes very noisy. For option trades. You can kind of see my blotter for the day and aggressive trades for the day. Many of them have earnings either next week, in a couple days. So it becomes very noisy to look at aggressive option activity because, unless you just want to day trade, but, typically I like to hold trades for at least a couple days. And if a name reports, a day away or 2 days away, you know that you really don't have much time to hold a trade if you don't want that risk, which I don't typically, of holding a swing trade just right into earnings, especially with options, because the premium could evaporate very quickly if they don't hit it to the upside or downside if you're playing puts. So option activity, I tend to still kind of try to filter out some of the names that are going to report into earnings. What I'm really looking at in option activity around earnings season is when the call buyers come in after a name reports earnings, that just tells me that the quarter was strong and that people are looking for upside movement after they've reported earnings, and they obviously like the results. So a couple trades that are on this list that have already reported that I like is Home Depot. We've also been seeing Lowe's calls, so in the home improvement space, which I'm going to spend the rest of the time. I think I've got about another 5 or so minutes. I'm going to talk about a couple of these charts and a couple of these sectors that are really strong. I like to stick with the strength in these markets and not with the weakness, and not try to say, oh hey, well this group is underperformed, maybe it'll start performing with the rest. For the most part, especially when you have choppy markets, I like to stick with the strength. So we've been seeing a lot of call buying in Home Depot and Lowe's, that home improvement, which is one of the best performing groups in the US year to date. And I'll show you the ITB ETF, and I'll show you the performance in that. We've also been seeing a lot of buying in the semiconductors still. About 2 weeks ago, the semis dipped, and they were bought very quickly. So that's been one of the best performing trades over the last year, is the semiconductors. And what I use option activity for is to kind of tell me on the dips where buyers return, where and how much the buyers return. So we certainly have seen that in the semiconductors. So I'm going to bring up a couple charts here in the semis. That is the wrong ETF. SMH is the ETF for semis, and you can see this trend. I mean, it doesn't get much better than that over the last 5 years. If you go over, just zoom in and just look at the year. So this was the dip that we saw, and you can kind of see every time. You know, the purple line is the 50-day moving average. You can see that we've only touched the 100-day moving average in the last year, once or twice. One thing to notice, every time that there's high volume, people get a little bit antsy and take profits, and then the buyers come right back in. And we saw this, if I could actually show, I do have a chart that will show this. Just bear with me as I said. This is going to take me 2 seconds to set up, but I think it's worth your while. So if I bring in fund flows, which I could do that now in Bloomberg, they didn't used to let you do that. And I want to just bring this down here to panel number 2. I want to bring this to histogram, edit this up, down, positive and negative, update. And then we don't need to see volume. So you could see every time there's been one of these dips, especially right here, you can see all this money coming out, rushing out, as there's some weak hands in the market. And then you could see buyers come right back in. So that's exactly what we've been seeing in select names in option activity. We've seen a lot of buying coming back into Micron post earnings. We've seen buying taking place in AMD. We've seen a little bit of buying in NVIDIA, and we've seen a lot of call buying in a couple other names like AMT, Applied Materials, as well. So that's basically what I'm looking for, is I'm looking for the trend, if not just one particular name, but you know, a group of names. So this is one chart that I really like a lot right now, and I think the trend is definitely your friend, and you know, and I think you want to stay long unless you break the 100-day moving average here. Also another chart that I'm looking at, let me just bring up a separate one. Baidu, I think, is really interesting. They report after the close. This is a multi-year chart, so I'm kind of going around here. If I take this chart off, you're not going to be able to see this trend line, so that's why I'm just going through to Baidu now, which reports after the close. Notice the 5-year chart in Baidu. It's now starting to break this downward trend line. So they report after the close, so I'm going to be looking at playing Baidu in some manner, either for earnings or thereafter on earnings, to see if we maybe get a check back to this red line. But I wanted to show you ITB. This is the home builders ETF, and I wanted to show you the performance. It's up 18% this year, so really nice performance. And this is just, as I mentioned, Lowe's and Home Depot. They are a part of this ETF, as well as a lot of the actual home builders like Pulte, Toll Brothers, Lennar, and you can see this has been in a real nice trend this year. It looks like it's consolidating right now, but I think staying long here above the 50-day moving average is what you want to do here. And then a new ETF that I gave a webinar about a month ago. We did a deep dive into robotic stocks, robotic and automation stocks. So why did I go into that, or what prompted me to get involved in taking a look at robotic and automation stocks? So this is a chart. Oh, that's not the right one. There are two new ETFs that are out there that cover robotic and automation stocks. And you could see this particular one that I have up is BOTZ. That is the candlestick line. The orange line is Robo, which is the robotics ETF. And again, this is fund flows. Anything red here is an outflow. Anything green is an inflow. Take a look at, robotics is a little bit older of an ETF than bots. Bots just came about, is a new ETF as of September of last year. So really didn't kind of catch on for a couple months when they debuted this ETF, but you could see all the investment. This is all inflows. And I think it's about $55 million that have been added to this new ETF. So basically, ETF that just started, has been seeing a lot of growth in the last couple months. And then if you look at this robotics ETF, which has been around for a little bit longer, take a look at the inflows that have happened year to date as well. A lot of money going into this particular ETF. I think it's about $170 million that have been added, which is basically double the size of the ETF. So just looking at one of these charts rather than overlaying the two of them, and kind of gives you perspective. Every time this thing as well, kind of looks like the SMH ETF. Every time this thing has touched the 100-day moving average or even the 50-day moving average last week, has been a great buying opportunity. So what's in this ETF? So I gave a whole about 2-hour presentation on some of the names that are in here. But you could see a couple names that have just reported. iRobot just reported the other day. Intuitive Surgical, Raven Industries. Some of these names, the charts are just straight up and to the right. Really, really strong. Another one that we've been playing is TGNX. Another one that we've been playing is MZOR. Really, really strong names. So we've been looking for so we do our homework. We try to look for trends and get familiar with names. And a lot of these names were foreign to me about a couple months ago, like things like MZOR and CGNX. But what we do at Tribeca Trade Group is we look for trends. We try to catch them obviously as early as possible, but I'll watch these fund flows to kind of tell me. And that was the first time that I had ever heard of the robotic ETF. I started to see all this money being added into that ETF, and then I started to say, okay, what is this ETF made of? What are some of these names? And then I can watch for aggressive call activity and say, oh, I'm familiar with this name. I'm not going to hesitate going into this trade because I've seen the chart of MZOR and it's really, really strong. So I think I went over a little bit over a half hour. I'll pause here for questions. I know I'm covered a lot of subjects, but lots to talk about in a half hour.
Christian, you've done very well indeed. You have indeed. Just in the last couple of minutes, a couple of questions from Richard. Going back just 5-10 minutes ago, what are the reasons you think there has been an acceleration of funds, of flows into the funds?
Sure. I just going back to a couple comments that I made earlier, there was just too many events. The market never really likes when the higher the gauge of uncertainty, which I think we really had that last week. I think nobody wanted to buy going into the French election. Very similar to what happened with the Brexit, and very similar to what happened with the U.S. election. Same trends. Nobody was buying in the 2 weeks leading up to those events. So just like with the Brexit, once the event happened, and once the event happened with the election, it was the same exact type of pattern, where once the event is over, everybody is like it's like the all clear. has been given, and money starts to return. So all that money that sat on the sidelines for the couple weeks, now fund managers redeploy that money very quickly once the event is out. And then also coming back to this, generally happens, just looking at a chart of the SPY. 3 months ago, for the last last quarter of earnings, you could see in January we sat with choppy markets as well. So we didn't really have a major event in January except for earnings. I really think fund managers sit on the sidelines and kind of wait for earnings to come out and make sure that they're coming out, they're beating expectations, they're strong. So that's what we saw. All of the beginning of January was the last quarter of earnings, and once earnings started to get halfway through, we broke out. So I think that's what's happening here as well. Most of the earnings releases, they were fair yesterday, but in the beginning of the week, we saw a lot of blue chips beating earnings and guiding up.
Yeah, well, this is what Richard's saying as well. He's saying, as in the USA, the QE has been cut back, and Trump's stated tax and investment plans or policies are being cut back. Doesn't it leave the markets on risk or at risk, especially if Google and the others don't satisfy investors with their earnings results?
Yeah, I mean that's been a hot topic. The financial media has really focused on the administration's agenda, so Trump's agenda. A lot of people have been talking about animal spirits and so forth, and it's kind of added to the rally. I really think for the last couple of years that you look at the U.S. markets, and we were really moving sideways for a couple of years. So I think just alone and the fact that there's going to be less regulation than more regulation has given enough oomph to the U.S. markets. I don't think that the market is really hinging on that all of these animal spirit type policies are going to get enacted. I think it's good enough. I think it's good enough that we're going to have less regulation than more regulation, and also you go to back to the earnings results. Really the politics interferes from time to time in markets, but the market really does what it wants to do. It does what it wants to do based on how companies are performing, right? And when we look at any particular index, what is it made of? It's made up of individual names and how they're performing. So yes, some of these names have gotten a little bit ahead of themselves, as Google has done previously. Again, I don't think this ramp up in Google over the last week has to do with the U.S. Political policies. I think it has to do with it's done this every other time it reports earnings, and there hasn't been any political agenda there either. So I think these things kind of come back to company fundamentals rather than what goes on in politics.
Christian, we'll have to probably wrap it up there. I'm sorry, we could go on, but it's good listening to you. Thank you for joining us. And Richard, thank you for your questions, your input. Sorry we're not going to be able to get onto them all. I would suggest contacting Christian directly if you're not already in contact. TribecaTradeGroup.com. Christian, what email address would people contact you if they want to carry on communicating with you?
Yeah, sure. I'll post it in here. Hopefully it'll carry through. Yeah, you could just use my regular Gmail address. So cfromhertz@gmail.com. And then also just find it. So you could find all of our products. I would love to see you guys in our trading room. We do this analysis, and we do all of our trades live. You could see all my positions as I'm entering and exiting, and obviously taking new positions real time. I post everything that we're doing. I carry both. Sorry to go on here, but I carry both a cash portfolio that my subscribers can see real time, as well as an option portfolio that they could see as well. And my Twitter handle, if you want to give me a follow, that would also be great. Where am I? Right here, @CFromhertz is my Twitter handle. Thank you again, Simon, for having me on. Really appreciate it. Look forward to seeing you next month.
And sorry to cut you off. I'm always the axe man, I'm afraid, but